It's officially time for the Miller Momentum Flagship Portfolio 2026 update. If 2025 taught us anything, it's that fighting the current is exhausting and usually expensive. So our theme for 2026 is simple: to profit, go with the flow. We aren't trying to outsmart the market's river. Instead, we're building a better boat to brave the rapids. But first, the legal housekeeping. Look, I'm not a financial advisor, at least not yet, and this is definitely not financial advice. I'm just a guy on the internet sharing my strategy. Sure, my strategy has beaten the global stock market over the past decade with less risk, and yes, it's currently outperforming the S&P 500 at least for now, but that doesn't mean you should copy my homework. You won't pass the tests investing will throw your way unless you put in the time and study and come to your own conclusions. Past performance is not indicative of future results. This is strictly for entertainment and education only. With that said, let's dive right in. My core investment philosophy is that everything is a trend. We're looking at data about how to harmonize with the living, breathing beehive that is the global economy, hopefully with minimal stings and maximum honey harvesting. I'm breaking my portfolio down into 4 specific types of movement. 4 elements, if you will. First, price inertia. This is Newton's first law for stocks. Objects in motion tend to stay in motion. This is the element of Earth, the core around which everything else is built. A lot of people call this momentum. Next, price reversal. This is for the underdogs. Undervalued companies making a comeback. It surges when momentum retreats, and the ebb and flow reminds me a lot of water. It helps carve and shape the earth. Third, societal prosperity. Betting on freedom. This is the breath of fresh air from young, blossoming economies. And last, volatility. Turning market panic into a paycheck. Fire is destructive but also creative and essential for growth, just like capitalism's creative destruction cycles. I buy assets to capture directional movement. If it's moving, chances are I'm interested. Now, let's look at the equity engine. We use a barbell approach here. Inertia on one side, reversal on the other. For the momentum core, our inertia trade, we're betting that recent winners will keep on winning. We're holding SPMO for the S&P 500, XMMO for mid-caps, IDMO for international. Then we have value reversal. Everyone loves a redemption arc. We use AVUV and AVDV from Avantis Investments to catch companies that are fundamentally strong but currently unloved. And it works. It anticipates the start of future trends and captures them early to give momentum time to catch up. AVDV alone delivered over 51% year-to-date in 2025. Turns out, international value isn't a value trap. It's a launchpad if you use it right. Why this balance though between momentum and value? The 60-40 ratio comes from Paul Merriman's two-fund 50% S&P 500 and 50% US small cap value strategy. Except for momentum, the sweet spot based on back tests is about 60% momentum and 40% small cap value. I also reject the exceptionalism of the US stock market while recognizing that momentum, after adjusting for currency volatility considerations, will remain strongest in the lower end of domestic large cap stocks and in domestic mid cap stocks, at least for economies of developed nations. Hence why momentum is distributed as it is, with 2/3 in US markets, because I'm in the USA, even though overall my equity allocation is split 50-50 between domestic and international stocks, as you'll see on the next slide. Next up is our emerging markets play, which I call freedom chasing or the freedom premium. So, we allocate 10% to FRDM. This isn't your standard emerging markets index fund that blindly buys everything, including state-owned assets. This fund is long freedom and short autocracy. It screens for personal liberty and property rights because, surprise, surprise, when people are free to innovate, economies accelerate. It also strictly excludes state-owned enterprises, so not much from China, or anything really, because generally, the government is not known for its stellar business management practices. The results? FRDM delivered 61.50% returns in 2025. Freedom pays. Now let's talk about everyone's favorite topic, volatility and rates. Most investors treat a market crash like a hurricane. They board up the windows and hide in the basement. I don't do that. I look at crashes as just another trend. A violent downward trend with a lot of selling involved, sure, but a trend nonetheless. So I allocate 10% to CTA, a commodity trading advisor fund, and 10% to CAOS, or CAOS, which is an active long volatility fund. CTA captures trends in rates and commodities, so if rates go weird or global trade hiccups or gets interesting, we profit. CAOS is my panic trend engine, and it actively trades volatility without the daily bleed of holding, say, VIX futures. So when the market panics, I don't sweat, I just rebalance. Finally, I've got my alternative investments, climate and fear. First, the climate trend, with a 10% allocation to catastrophe bonds using SHRMX or CBYYX or ILS or something similar. As climate volatility picks up in the years to come, reinsurance demand will continue to spike. We are essentially getting paid to underwrite disaster risk. It's a way to weather the storm, quite literally. Second, the fear trend. We have a 10% allocation to CEF, gold and silver together. We're betting on currency debasement and fear cycles. When the money printer goes brrr, we want to own things that are heavy, shiny, and hard to print, that also have a surprising number of industrial and technological applications, which, especially with silver, are growing quite rapidly. So for US investors, Sprott physical bullion trusts like CEF potentially provide favorable tax advantages as well versus owning metals directly or through precious metal ETFs like GLDM or IAUM. So PFIC stands for Passive Foreign Investment Company, and that's a very important and good term to know. A foreign corporation such as the Sprott Physical Bullion Trusts will be treated as a PFIC for any taxable year if either of the following is true. More than 75% of its gross income is from passive sources, or B, at least 50% of its assets are held for the production of passive income. And guess what? That applies here. So if you file the right forms with the IRS each year when you do your taxes, you'll get massive savings on CEF gains, usually around 9% of your gains in taxable funds for your precious metal holdings. So if you would normally get taxed at the collectible rate, I believe that's 28%, you'll instead get taxed at a foreign investment company rate, which is 15%, so that's cool. You can also redeem your metals if you want, if you own enough shares with CEF. And plus, the market value of CEF fluctuates and sometimes diverges from its NAV. So there's a bit more volatility we can harvest here, and I always love harvesting a little bit more volatility. So here's the full 2026 lineup. We have our equity engine with SPMO, XMMO, IDMO, AVUV, AVDV spread evenly. We have FRDM capturing the democratization wave and the spread of free markets. We have CTA and CAOS managing the market structure situation. And I've got cat bonds and precious metals to do some cool plays on alternative risks. It's a diverse mix designed to capture momentum, value, freedom, and even fear. We don't know exactly what 2026 will throw at us, but with this portfolio, I'll be ready. Thanks for watching, and here's to a profitable year ahead. Oh, and don't forget to like and subscribe and leave a comment below. What would you like to see next? I plan to do deep dives into each ETF in my strategy, so check back often. Let's keep on rolling.